I'm Rod Husband, President, CEO of Epic Gold. I've been in that role only for about a month. Our story is a relatively new one from a company that pivoted out of Newfoundland fairly recently and is now focused on our projects in Quebec and Ontario. You'll see this a lot, typical disclaimer, don't have to explain that to you. What we're focused on is creating value in this company through discovery and strategic transactions. So as we moved out of Newfoundland, we were looking at opportunities back about a year ago, and we've evaluated several, we looked at about 200 companies, but we took about a dozen of them to fairly serious due diligence stage. So we still have a few that we're working on. So there may be some stuff to come down the pipeline here. Overview of our company, basically, as Brian said, we've sold our projects in Newfoundland to Newfound Gold. Their shares right now valued at about $11 million. We have $3 million in cash, and we have a contingency payment of another $3 million. So up to $17 million in cash and equivalents on our balance sheet, and a market cap right now about $14 million. We have on our 4 projects, 3 in Quebec, 1 in Ontario, we have 680,000 ounces of gold, historical resources. So you look at us and basically you're getting the gold for free. Our 4 main pillars are right market, right timing. As Brian said, gold is the place to be right now. Well, gold and most metals. Quality projects. What we mean by that is you want to be in the right place, tier 1 jurisdictions. You want to have the right target. It's got to be big enough to matter. You either got to build a mine, build your infrastructure, or have somebody take you over. And that's hard to do if you're only looking at 200,000 ounces. So access to capital, as I mentioned, we're well funded right now with the shares that we have in Newfound Gold. And we're fairly well connected with people that have supported us over time. Eric Sprott's a 12% shareholder. We've got a pretty solid board of directors that covers everything from technical to capital markets to ESG as well. So it's created a fairly unique opportunity, we think. Slide that we use here is a slide that is 60 years of history of the gold price. So this will sort of add to what Brian was saying about where we are in the market, and I'll explain why it matters to us. This is broken down into 15-year segments starting in 1970 when gold floated. And you can see that in the last 5 years of those 15-year cycles, there's been a very significant re-rating in the price of gold, except for the late 90s. And why didn't it happen in the late 90s? Really because there was budget surpluses and they weren't printing money the way they are all the rest of the time. So when we look at this, we've just entered sort of the 5-year re-rating. Gold is $4,500 to $5,000. We expect, if everything stayed the same right now, that at the end of these 5 years, we're going to exit somewhere around that level, $4,500 to $5,000. If they keep printing money, that'll be adjusted upward. Most importantly, why it matters to us as exploration development companies is it changes how you have to look at projects. Every time these re-ratings have happened, cutoff grades, what makes mines economic, drops. So at $4,500 gold, run a mine cutoff grade for an underground mine is about 1.5 grams a ton. Right now they're using about 3 or 4 grams per ton when they do average grades, and before that it was 10 to 15. So every time there's a readjustment of the gold price, lower grade projects become extremely economic. We've just started our transition. Back in May, we were trading at 3 cents. We picked up the new properties, got a little bit of a re-rating. We announced the sale of our properties, got another re-rating. We're sitting there now, as I mentioned, $14 million market cap with 17 in cash. We have no warrants, 200 million shares out. We have a few options. We're fairly liquid for a junior. We trade about 750,000 shares a day. We'll get into very quickly, go through our projects because I won't have too much time to do too much detail on them all. But location's important. So we're in Quebec, 3 projects in the Abitibi Greenstone Belt, very prolific belt. Everybody knows the Larder Lake and Porcupine Destu breaks where 200 million ounces of gold has been produced. Billions of dollars has been spent on exploration. Slowly that exploration is moving up to the northeast. There's been a couple of major discoveries, Detour and Trellis is back in the game with multi-million ounces. We're up in that area with our 3 projects as well. And one of the reasons that we particularly like this is infrastructure. There's mills, processing facilities in the area that have capacity for us, so we don't actually have to think about investing the capex to build a mine. So it changes what we need to find to be economic. One of the first things that we had to do was figure out the mineral systems that we're dealing with, because a lot of companies, when they get into projects like this, they use what we call target-based exploration. They'll drill a hole, find gold, step out, drill a hole, find gold, step out, not find gold, try to get back on trend. So really what you need to do is figure out what brought the gold in there. And in the Abitibi belt, you find the 4 main sources of gold in the world. You find orogenic gold, you find VMS, volcanogenic massive sulfide, you find banded iron formation, and intrusive related. And on our projects, it's not just one. You often have overprinting of 1 or more of these on projects. So we had to take a hard look at these projects to figure out what we had to look for to be successful with our exploration. You'll find all of our projects very similar theme, right? Mining friendly tier 1 jurisdiction. We started with a reputable gold resource, even if it's small. We made sure that they all had significant upside. And then the final key to the puzzle is they have to be financeable. You have to be able to demonstrate that you have the potential to make them into economic deposits, whether it's size to justify the capex to build your own, or whether you're close to existing infrastructure. So the first project I'll go through quickly is Fenton. It's up near Chibougamau in Quebec. Very active mining district, lots of mines up there. IAMGOLD recently bought Northern Superior, which is right in our vicinity. It has a small historical resource. You can see, well, probably can't pick it out without a pointer, but the little circle in the middle there is where the existing resource is. There's a lot of gold that's along trend that hadn't really been followed up. There'd been 1 or 2 drill holes, a lot of good surface samples. So what we did was go in this summer, did a very detailed airborne mag and VLF-EM, and you can see that the results really start to pop. When we do an overlay here, you can see that the mag highs, and along the edges of those mag highs where the gold is. So we developed pretty good targets on what to look for. The next thing that we had to do at Fenton was go back in and understand why some of the historic drilling missed. Was it fault misses? Was it something else? In the case of Fenton, the most obvious explanation was that it was boudinage, which you have a brittle rock in these collision plates, extensional and compression going on, and you create these sort of lenses, if you will, of where the gold gets concentrated. And on the far right, you see one of our drill cores here, and you've got these little micro boudins. So tends to indicate that we're bang on with our theories here on how we're going to drive our exploration. Next thing that we did here with Fenton, in particular, because the resource that was done here is very small. It's 60,000 ounces. But since then, they had 11,000 meters of drilling. So we put that into a database to see, okay, look, we're looking at it through $4,500 gold eyes now. What happens if we drop the cutoff grade down to 0.2? So we now have a target there that's almost 500,000 ounces. All the historic drilling is with 200 meters of surface. So we now have, instead of just a high-grade underground target, we might have something that can be developed into an open pit. So there's where the Fenton current resource sits. We've identified 6 or 7 other targets. We've drilled 6 of them now. 10 holes, 4,200 meters have just been finished. We're starting to get assays back from the lab. We've decided to send them all back in because the lab told us that there was a bit of coarse gold in a couple of the samples. So we said, do them all for metallic screen. We want to make sure that we don't miss any gold that's there. So we're probably 4 to 6 weeks away now from getting the results of all those samples. If we hit another Fenton, and if the continued studies of this mineral resource go, we think that we can build Fenton into a 1 million or 1.5 million ounce target in close proximity to others. And you'll see, I don't have long, but Wilson is about 150 kilometers from Val d'Or. Very similar situation there, except this one, as opposed to having intrusive related influence with orogenic, this is more VMS. And you can see the felsic ash tuff and the drilling that was along it. Not a lot of outcrops, so the geology maps that were done here were largely done most recently and by us, with a lot of the detail coming out of the historic drill holes. And the nice thing there is you've got these nice tight folds, which again is a great place to find traps for gold. We did detailed geophysics again, and you can see the trace of this geology, some of the historical showings that were surface showings and or drill holes on them line up extremely well with this contact zone now. So we've just taken a fairly small resource here of 65,000 ounces now and expanded it by being able to drill along this contact zone. We're waiting for permits here. This one will be drilled this summer. We're doing the same thing here in terms of the resource estimate, because there's been 22,000 meters here drilled since they did the original resource estimate. So a lot more studying needs to be done in terms of what the actual target is here. Can it be a 500,000 ounce near surface deposit? Again, we think most likely, and with the ability to now drill along strike. Again, a potential here for a project that can get up into that 1 million ounce sweet spot for a project in Quebec. Another one, very similar story, Benoit. This is a little bit bigger right now, has a historical resource about 240,000 ounces. It was done in 2020 with a 1.5 gram cutoff grade, and the average grade of that 240,000 ounces was 2.6 grams a ton. In that report, they did a sensitivity analysis at 1 gram. That generates about 350,000 ounces at about 2 grams. Will be an underground mine, but the beauty of it is it's 20 meters wide. So 2.1 grams at 20 meters is very significant. It's open down plunge. So again, this one will be developed. We're waiting for permits on it, but it'll be developed into drill targets as well. And real quick, the other beautiful thing here was after they did all the drilling, they went in and did some VTEM, helicopter VTEM, and they identified additional targets that are actually on land that haven't been tested. So part of the extension of the existing resource, we're going to turn the drill around and drill a couple of these other targets. And if we can pick up another Benoit deposit, this thing has potential to, again, another 1.5 million ounce deposit. So those are our three main projects. Another one that we have in Ontario has a very significant resource on it. But the most important thing is it's 60 kilometers of a deformation zone with gold spotted all the way along it. So what we're going to be doing this summer there is fairly detailed prospecting. We've got 3 crews going into 3 different areas for a month to see what they can uncover at some of these other showings. This resource is 328,000 ounces at 1.6 grams, about 6 to 8 meters wide. It's good for run of mine, but it's not going to make a mine yet, so we have to find some more higher grade stuff before we can really make this one as sort of a flagship property. A great team. Myself is a geologist. Got Doug Cater, who used to be the VPX of Kirkland Lake, was responsible for them evaluating and taking over the Fosterville deposit in Australia. Guy Bedard's a mining engineer. He worked for First Majestic down in down in Mexico. So we've got a good technical team. Larry Short's a money manager. He's got a money management business in Toronto and St. John's, Newfoundland. And Siri is a lawyer with ESG experience. So we've got pretty much everything that you need to cover off in a mining company. In terms of value pathways, right, we're going to spend a lot of time telling our story because it is fairly new. The name just got changed. I just got appointed CEO. We right now trade at a negative enterprise value per ounce. The peers in Ontario and Quebec of ours have an average or have a median about $50 an ounce. So we got a lot of room to move there. We're going to grow our resources through exploration and discovery, but also through strategic acquisitions. We are still looking at a couple of these other projects. We still have a couple of projects in Newfoundland that we have the ability to monetize somehow, whether it's a spin out or a joint venture or a straight sale. Okay, I'll leave it there. Thank you.